Good day, fellow investors. Let me share with you the key investing factor that you need to know going into 2025. If you look at the data over the last 20 years, the annualized return of the S&P 500 was 10.2 per year. Over the last 10 years, 13.5 per year for staggering returns, and that doesn't include dividends. If we include dividends, we are at 14%. Plus, investment bankers have given further projections of market growth 10% next year to even 7,000 points, as we discussed in this video. And here are the average projections. They go from 6,400 to 7,000 approximately. But I am here as a value investor. I have been investing for 22 years now, did pretty well for myself, and you want a value investing perspective on things here. If I look at the market, people are buying stocks only go up 13% per year plus dividends. What can go wrong? Well, firstly, 6,000 is much different than 2,000. That's a huge difference. And you are now buying the second most expensive market in history. Only once was it more expensive in the dot-com bubble. We know how that ended. 1929 bubble, we know how that ended. 1968 bubble, we know how that ended. And also here it was ugly 2 centuries ago. But let me show you the key investing factor for 2025. This is all you need to know. Berkshire Hathaway's cash position now is 28.3% of assets. If Warren Buffett has 28.3% of assets in cash, what else do you need to know? There was this comment how I said that Buffett went all to cash, and I stick to that. Buffett's 30% into cash means he sold almost everything that he could sell. Other is not for sale. Let's check Warren Buffett's portfolio. The portfolio now is 276 billion, and the top position, 27% of it is still Apple. So that's around what, 70 billion. And let me argue here that at the end of this quarter, when we get the data, I think should be somewhere February, no? When Warren Buffett publishes the 13F, I would argue that Buffett has closed Apple, if not significantly decreased it again. I would be surprised if Buffett still holds Apple next year. And that is Apple. Then we have American Express. He does not intend to sell. He bought this so a long time ago. Bank of America, I don't know what his plans, but Coca-Cola, he will not sell there. Chevron dividend preferred dividends, whatever. So all these businesses give him cash flows that he can reinvest in case of a crash. Apple did buybacks at expensive prices and he punished them. I don't think Tim Cook will come to the next Berkshire conference. But this is the situation now. Warren Buffett, cash pile, and he cannot sell the businesses. He doesn't plan to sell the businesses he owns, like railways, etc., because those businesses are cash liquidity providers year after year after year, and he can simply get more cash when he needs from those. His insurance has cash flows, hedge, bringing in, buying more, compounding, but he is not holding, he's selling the overpriced and the liquid, which is Apple. And Warren Buffett says, we simply attempt to be fearful when others are greedy and to be greedy when others are fearful. At this moment in time, with the market at historical highs, I think others are greedy and Warren Buffett wants to be fearful. But then you say, Sven, stocks only go up. What can go wrong? Trump, this, that. Well, look at this, 2000, the same chart, stocks didn't do anything for more than a decade with 2 times minus 50%. I mean, it's your money. Warren Buffett tells you in one chart everything you need to know about investing going forward. The rest is up to you. I cannot do more.